This is the May 2025 webinar for the Canary Digital Fund here at Canary Capital, which we've entitled There and Back Again, similar to the Lord of the Rings, of course, callback, because Bitcoin has recovered fully from its drawdown of 30%. Just a quick overview of the fund itself. We're a discretionary risk managed fund, which for us means we have the ability to go into short-term treasuries if we see a heavy drawdown coming or a cycle end coming, for example. We tend to focus on heavily discounted assets when we can. That previously included things like GBTC. Currently, that includes things like BitW and GDLC, which are still discounted around 15% to NAV. Those are basket ETFs. We actively manage this based on macro and Steven's side and technical analysis on my side. And like I said, when we aren't in risk, we risk off via US Treasuries. Steven's had years of experience in the fixed income market at Guggenheim. He's had successful exits at Galaxy, and through Valkyrie. And I've been trading since 2013. My background is research analysis and specifically digitally native trading. So today we're going to be talking about, on the macro side, all the classics: inflation, the Fed, tariffs, the dollar, global liquidity, which all of this collectively is providing a tailwind for us. That's undeniable. On the macro side, it would be interesting, and it's interesting to think about what this market would look like without the macro side that we're seeing now. We, of course, have the regulatory side, which is also very helpful for us in the US. But the most important thing is certainly macro kind of crumbling a little bit in a good way for digital assets. And then on the crypto side, I'll be talking about ETF flows, TA, and some alt charts at the very end. So as we all have noticed, unless you've been living under a rock, I guess, Bitcoin has rebounded quite a bit from Liberation Day. You can see it there marked in April. We also had the Trump meme coin launch in January, and that's when Solana peaked. Solana is still down around 9-10% from year-to-date open. ETH still down significantly, around 24% from the year-to-date open. Gold and Bitcoin obviously doing better than the rest of the market. Fixed assets, fixed supply assets doing very well. And Bitcoin, hands down, outperforming relative to other digital asset markets at the moment. For Q1, looking at GDP, there's a lot of hand-wringing, and rightfully so, about the predicted extremely negative GDP print that we were going to get. That ended up being at 0.3%. So it was not as bad as expected, but not 2%. That's kind of our cruise control altitude here on GDP. Currently for Q2, the Atlanta Fed is expecting 2 to 2.25%, 2.4%, something like that for GDP. So if we don't get another negative print, we won't get an NBER declared recession, and we won't get these consecutive negative quarters that is necessary to get the official recession declared. Now, I think we can all look at yield curve. We can look at the 10-2 flipping positive, but ultimately we haven't yet seen the jobs market explode on the unemployment front. So from a macro side, things are okay. You know, rates are where they are and things aren't falling apart. Crypto's at all-time highs. GME and AMC are exploding today. You know, the meme coin stuff, the quantum stocks, the space stocks. The memeier stuff is doing really well despite what's going on with macro, or perceived what's going on with macro as far as some headwinds. So it kind of says maybe we don't need the rate cuts that everybody thought we were going to get. Coming into this year, we had something like 4 to 6 cuts priced in. This is the Fed watch probabilities for the remainder of the year into 2026. And currently, it's expected to have, we're expected to have 2 cuts this year. That's, of course, down from 4 cuts. And for the next 2 meetings, we're expecting nothing at all. No hikes, no cuts. you've got the reinflationistas, I guess you could call them, the Jim Biancos of the world. Love him like an uncle, but he's very much in the camp that we could possibly see a hike this year. And if unemployment doesn't materially move higher, it's possible if inflation creeps up beyond what we're already seeing, which I'll show in a second, but inflation is creeping up. Unemployment is still historically low. So despite all of the soft data points you might hear, all the anecdotal stuff people might hear on a day-to-day basis, to me, what the Fed cares about exclusively here is unemployment. If that doesn't rise significantly, then the Fed's just going to wait and see. They're going to be late. They're taking this approach that they're waiting for the data to come through, and that's that. So we're unlikely to see a significant hike in rates, a cut in rates, unless unemployment spikes. And if that is the case, then maybe the economy is deteriorating at a greater clip than was expected, and maybe that isn't a good thing for risk assets. So it's kind of interesting. Everybody thinks cut. It's going to be great for risk, but ultimately, maybe we don't want that. Maybe we're fine where we are. Looking at the inflation metrics, we've got CPI, Trueflation, and PCE. We're going to get a PCE print this week. It should come in around 2.23. That's the print for last month. Next month's print is where we start to run into trouble because if you notice here on the chart, we are starting to curl up a little bit on the inflation metrics. So what the Fed cares about is obviously CPI and PCE. Trueflation dipped well below 2% for quite a few months, but is now back above 2%. Trueflation, for those of you unaware, is a real-time gauge. It pulls millions of prices based on online data and aggregates that into a metric. That's going to be a little more sensitive than CPI and PCE, but we were headed in the right direction and we were staying low. Post Liberation Day, that has changed a little bit. So to me, this pushes cuts even further back, rightfully so, if unemployment, again, is fine and inflation is rising. That's not what the Fed likes to see for cuts. It just isn't. And for the moment, crypto doesn't really care. The SPY is like 5% from all-time highs. Doesn't really care. Some of the other memeier stuff, the Mag 7 stuff, is all rebounded. Tesla is up significantly, right? So do we really need cuts is the question, right? Maybe things in the IWM do. The lower market cap companies that can't easily refinance debt, things like that, maybe they need rates to come down. But for the K-shaped economy the way it is, for the moment, we are fine based on the data. And I thought I'd just highlight one specific comment from Powell last, I guess it was this month, right? 5/15. He was at a conference and he was saying, he's going through a spiel about expectations for the Fed. And he did hint at reconsidering the average inflation target. So in the future, what that may mean is instead of a specific level, it may mean a band from, let's say, 2 to 3, right? Versus a specific level. That would be, again, very bullish for crypto, probably terrible for savers because they're getting hit on the inflation front. No hard comment on what exactly the inflation target will be, but I could imagine them moving to like a softer, fudge of a level versus the 2% target that they've been sticking to. Here's the yield curve, and I think as anybody who's spent 2 seconds in macro learns about, you learn in biology, you learn that mitochondria is the powerhouse of the cell. And in macro, you learn that if the 10-2 yield curve is negative, we have a recession eventually, right? So the yield curve, the 10-2 yield curve was the most negative I think it's ever been. And for the longest it's ever been coming into this year, that has flipped positive. And if you'll notice these green bands, we don't have the recession, which is declared after the fact, immediately upon the negative yield curve, right? That happens after the upswing, the yield curve flipping positive. So we're in the wheelhouse of eventually expecting some sort of recessionary print here. But unemployment has not taken off yet. GDP looks fine. So here we are. Are we going to break the cycle here with no recession? I mean, it's possible. I doubt it, but it's possible. We've just yet to see that rapid rise in unemployment. Another super bullish tailwind for crypto, anything denominated in USD, is obviously the dollar index declining as much as it has. Just like Trump's first term, Trump 45, Trump 47 has weakened the dollar, regardless of tariff rhetoric, regardless of anything. All that's mattered here is the dollar going lower, and that has certainly helped digital assets. So we don't need the dollar to go to zero for digital assets to do well, but the dollar staying weak and being weak is certainly very helpful for digital assets to buoy higher, right? Because Bitcoin is denominated in BTC, it's competing, sorry, in USD, it's competing for dollar strength. Back in the day, many moons ago, Bitcoin heavily correlated with emerging markets. And that makes sense if you line up what's going on now, especially with a lot of the international indices doing very well in light of the dollar falling off. So money's going home and money's going elsewhere. That isn't the dollar, that isn't US markets. In 2018, we did see a crypto cycle peak relative to the end of dollar weakness. So the dollar strengthened after January 2018. So what's tough here is there's a lot of data points that kind of suggest that maybe we can bleed this bull run into 2026. There's other data points that I'll share that suggest maybe Q4 is probably what we're going to get for this cycle, and then a extended consolidation period. So we'll see, but we'll definitely keep an eye tracking the dollar. Now, along with dollar weakness, we've had global liquidity, which has continued to rise. This is a specific indicator from TradingView, and I've offset this 75 days. And you can kind of see, like, if you didn't know which line was which here, you might guess that the Bitcoin line is the global liquidity line because they're mirrored so closely. Gold also follows this very closely. It follows global liquidity, which made a new high just within the past week. So as long as global liquidity continues to rise, as measured by this or as measured by countries printing money, stimulus, I saw a stimulus coming for Japan. I think there was stimulus coming in Europe. We've got New York State talking about stimulus. We've got California talking about stimulus. Everybody's trying to fight inflation with stimulus, fine, but that's just going to make things worse. And that's going to push the global liquidity index higher. Like I said, Bitcoin follows this index, but with a 75-day offset. So it's not a one-to-one correlation on the day. And we'd expect a bigger headwind if liquidity was falling off, but we're just not seeing that. You know, we're seeing really since Liberation Day, we're seeing Bitcoin do very well after that, along with global liquidity. Gold in the mix there, obviously, too. Gold will continue to do well. It won't do as well as Bitcoin will, but it will continue to move higher, most likely. Along with all the companies that are adding Bitcoin to their treasuries or buying Bitcoin for some Bitcoin strategy, we've got state level in the United States, at least, reserves also beginning to start to think about adding Bitcoin to their balance sheets. Arizona and New Hampshire have already passed bills to add Bitcoin to their balance sheets. Bills where you'd think things would get approved. I think Wyoming would be right up there based on the Bitcoin Mecca epicenter that Wyoming is, but that got rejected, at least initially. But we have, I don't know, half a dozen or a dozen more states that are pretty close to introducing some sort of Bitcoin reserve bill. The question up here at this price for Bitcoin is who's going to be the marginal buyer? Is it going to be retail? Probably not. You know, maybe in aggregate we're going to see retail buying, but it's going to take some institutional level buying to continue to push price up. And where is that going to come from? That's going to come from companies buying for treasuries, and it could come from states, nation states, countries buying for their own reserves as well. And it's certainly headlines that are happening every day. I mean, just today, I think DJT was the company that is adding 2.5 billion in BTC to its balance sheet. So if we separate this between, you know, like cycle considerations and near-term expectations, this would be in the near-term expectations bucket. If we look at post-COVID, what the seasonality has been for BTC, June has really been a terrible month. So my expectations for June certainly aren't positive. You can see the average there is negative, median is negative. August and September also Q3 historically not a great month. There's tends to be a summer lull for BTC. So we're approaching that slowly here at the end of May, right? July, on the other hand, tends to be more positive, but that's kind of it until October. And October is generally where you want to be fully risk on because the numbers speak for themselves. We've never had a never had a negative October, right? We've only had one negative January since post-COVID. So very interesting seasonality dynamics here. But the takeaway is that June is probably going to be problematic based on what we've seen, and we're going to need some spikes in global liquidity. We're going to need some fuel to keep us going into June, obviously, because the summer months again tend to be a little challenging. We also have this forward performance dynamic of 8 positive weeks. We're currently in the 8th positive week for BTC. And historically, we've only ever seen that 3 times. So we don't have a lot of data here. But in those 8 green streaks, those 8 green positive weeks, 9 consecutive green weeks, has not happened. So the next week has been negative. So again, if we want to look at the tea leaves here, seasonality for June, not so great. The 9 week streak has never happened. That isn't even saying like this week will close positive, but just upcoming here, again, it's going to be challenging, I think, to continue despite being at all-time highs at 110, 112, whatever we are at the moment. You can see the following week, average return negative 12%, median negative 14, and it's never been positive, like I said. However, if we look further out, 6 months, a year out, it has been positive, and that doesn't make sense relative to where we expect cycle tops to be. Kind of expect the cycle top to be Q4 this year. So either we just continue through 2026, which we'll be there for if it happens, but it's certainly not the expectation, or we're gonna break some forward performance here if we see a super positive streak continue. This is back to the cycle bucket. Again, like where are we at in the cycle? Everybody is generally focused on this because we have seen 4-year cycles. That isn't to say we will continue to see them, but that's what we've seen. You can see duration wise, we're about 920 days in, and we've generally topped out at around 1,000 days is where we've seen. So maybe we have another 200 days in us. Again, that brings us to like October, November. We're getting a little long in the tooth just based on duration. The multiple itself is down cycle over cycle here. I think that's to be expected based on the market cap. But again, we're getting a little, either this breaks, we don't have a lot of data, right? It's just 10 years, but either this breaks or we're closer to the top than we are to the start, obviously. Just again, something to take into consideration here relative to what we've seen historically. Another thing outside of treasuries and nation states buying that could help fuel a continuation is the ETFs. Now, we've never had ETFs, obviously, on the spot side 10 years ago. Is it fair to compare the previous 10 years to the current environment? Maybe it is, maybe not, but that's the data we have. We are still seeing Bitcoin ETFs buy significantly. Last week in the US alone, it was 2.75 net on the positive side. Globally for crypto assets, it was around 3.3 billion. Most of this year, most of the inflows this year have been BlackRock. We've really not seen much in the other ETFs. I think there's 9 of them total, maybe 10 of them total on the US side. ETH, on the other hand, hasn't really picked up any steam yet. Until those ETFs get staking, if and when they do, that's when I'd expect flows to pick up a little bit more. Obviously, price hasn't helped the flows, which has lagged bigly relative to BTC. And if we get in the weeds a little bit further, I'm just kind of going through the checklist of things we look at internally for the fund, right? So what is positioning? What is funding? Where are we at in the cycle? What is the forward performance relative to what we've seen suggest? These are all the knobs that we're trying to look at as we're positioning. If we look at the futures data for Bitcoin on the CME, we can look into the net positions and who those positions are. This isn't just the Bitcoin phenomenon. But if you look at across all of CME futures, you generally want to be on the side of the commercials. So you have the commercials, the small speculators, retail, and the large speculators, which would be hedge funds. Commercials for Bitcoin would be the miners or mining companies, companies in Bitcoin. They are currently extremely net positive in their positioning. They're the most positive they've ever been on net for positioning. So if we look at back testing on this, right? When have we seen positioning like this? We've seen very positive returns for Bitcoin. Another potential continued tailwind is things like this, it's positioning. So this is not bearish at all. And if this starts to wane, then I think it's fair to get more bearish. But in the moment, in maybe the medium term, this is exactly what you want to see. Commercials extremely, extremely net long. And it's kind of less about what it represents and more about the back testing, at least for me. The idea here being if institutions or hedge funds are off sides, they'll have to unwind this positioning, and that's how you get fuel to move the price higher. So positioning looks great. If we look at retail funding, futures funding, margin funding on the Bitcoin side, in that graph down here, aggregated funding, this is telling you how much are longs paying shorts. Currently, longs are barely paying shorts anything. So on a relative basis for funding, if we think about this cycle, funding can expand significantly higher as a percentage. So this does not look like euphoric funding at all. This is not what we see or have seen at the end of a run that would require continued consolidation. That's just not what we're seeing here. Back to the cycle idea, if we look at the power law corridor, which is kind of the favored price model, not just because it fits well on back testing, but it does decently well or has done well since inception, which I think was as early as 2013. People started looking at this, but looking at the power law corridor, again, like are we overbought or are we oversold here? We're kind of in the middle. So we're kind of at quote unquote fair value for this price model. So at the moment, we don't look euphoric. We have room for upside, certainly, and we're in no trouble of immediate rolling over in a cycle perspective, right? Now, if we were above 200,000 or if we get that far, then I think it's easier to say, okay, it makes more sense. There's probably less upside left, right? But we're just not there yet, regardless of the price being the price, right? Some other technical factors, you've got a chart pattern here, a cup and handle, that also is pointing to a potential move higher. This is something we highlighted at the beginning of the year as a potential on technicals that could fuel us higher. And I'm not just pointing out bullish things. It's just there's hard to find bearishness here. Like, we have a 5,200 golden cross. We have global liquidity on our side. We've got some tank left in the cycle. We've got some fuel just based on expectations that could help us into Q4. I don't know if it's fair to expect 200K this quarter, but I think for the year in Q4, it's certainly a potential outcome to look for if things get euphoric, right? That's what it's going to take. I mean, what is it? AMC's up 20% today. Like, why, right? I don't know. I couldn't tell you. Maybe they're adopting a Bitcoin treasury as well, but things can get a lot crazier is my point. We've also got this multi-year bullish channel for BTC that looks very good for continuation. The last time we were up here, we had a little bit of a blow off, right? If you look on this extension essentially beyond what we've seen in 2024 and in 2025, it does give us a little room for some additional upside. Now on a risk adjusted basis, downside versus upside, we're probably 50-50 here, whereas at 80K, we were skewed in a positive direction. So, I think fresh positions at this level are probably iffy. I like 1066-ish as a trailing stop loss here, but some additional upside I don't think is out of the question at all. Another metric we like is the Ichimoku cloud on a trend basis. This is as bullish as it gets. All signals are just as bullish as they were here. In any other time, you'd expect bullish continuation. The only caveat being the TK lines is what they're called. Tenkin and Kijun are separated far apart, which again just kind of means we're overbought, right? Now we're 50% from the bottom in April, so that makes sense. But in the near term, again, if we think, okay, 9 weeks streak, June, I personally think we're due for a little bit of a pullback here, uh, this week or next. You can add on the Bitcoin conference in Vegas. We typically see some pullbacks relative to that date, just because there's a lot of expectations going into the event, and then those expectations aren't always met. So price tends to go lower after that. After that. So that's BTC. Now, alt's kind of a different story. If we look at an altcoin index relative to BTC, that has really done poorly since 2022. Poorly is probably an understatement for a lot of these coins, but we're not seeing Bitcoin outperformance. Sorry, we're not seeing altcoin outperformance just yet. We've seen glimpses of alts doing well, but nothing like 2021. And that was closer to the end of the cycle. So if we're going to see alts do well broadly, I would expect that towards the back half of the year if we see it at all. But how this is positioned currently is the opposite of Bitcoin strength, right? This is basically the inverse Bitcoin dominance chart, and it is very bearish and continues to be bearish on trend. This affects our own fund positioning, where we tend to be focused on Bitcoin where it makes sense, and then alts selectively where it makes sense. But Bitcoin clearly the winner here over the past couple of years. On the fundamental side for the network activity, we're seeing ETH pick up a bit. If we look at the network transactions here on the left, that has started to pick up finally. Average transaction fees still relatively low, but it's started to pick up. This is just one way, again, to measure the diagnostics of who's using this stuff. Is anybody using ETH, the chain? Yes, they clearly are. Fees are still very cheap, which you'd think, oh, that's great. From a user perspective, it's excellent. You can transact on ETH super cheaply. The problem is ETH price-wise does best when transactions are expensive, because that means people are doing stuff on the chain, right? Now you can say, well, this is scaled really well. It's got tons of L2s. That's fair, but it's competing with the layer one. There's so many tokens here, so many networks outside of ETH that are all in competition for the same users and the same transactions. Solana, similarly, excuse me, we're seeing new addresses pick up here on a weekly average. You can see the lull. This was the spike here was Trump meme coin launch, right? Previous to that was the pump.fun, retail speculation, euphoria. And we're starting to see the new addresses curl up again. So we're starting to see some of that come back. Total fees on Solana, again, you can see what happened January, February. Fees just spiked. There was a ton of activity. Not seeing much of that now. So something to watch for. Generally, if prices are bullish, fees are way up, new addresses are way up. It's hard to say, it's like a chicken or the egg problem. It's not that new users precede price. It's usually the other way around. Usually price brings people in. At least that's been my experience. Avalanche is another one we can look at. They had a massive spike in new addresses a couple weeks ago. But the other problem with this stuff for alts is it's hard to get sticky users. It's hard to get users to stick around and use the chain continuously. Much like ETH, AVAX has a token burning mechanism that helps take coins out of circulating supply, but that hasn't really ramped up and stayed ramped up in a significant fashion for quite some time. So the general trend for chains like AVAX is new users onboarding, but are they sticking around? What are they doing? What are they buying? Right? That hasn't quite materialized to bullish price action just yet. And then lastly here, so our investable universe for the fund includes crypto equities, and I just thought I'd throw this Schwab chart into the mix. They announced, I don't know, at least 1 or 2 weeks ago at this point, that they're looking to get into spot crypto trading within the next year. And that will likely bring fee pressures for trading way down. And that'll just bring more money, potentially into crypto assets. So it may be fair to start comparing Schwab to things like Robinhood and Coinbase if they actually launch crypto trading. And technicals on the chart here, to me, look excellent. This is a multi-year consolidation getting ready for a breakout. And just measuring it, all we're doing here with the fibs is just taking the depth of the consolidation, measuring it higher. That gives you a zone where price could possibly go. So something to watch if things take off into Q4. So with that, we will stop there, pause for questions if there are any. And thanks everybody for joining.
We had, Josh, we had one question come in before the webinar. Arnold wanted to know, are BTC treasury companies the new exploding asset as were NFT and meme coins?
Yeah, I write these weekly pieces every Monday for Canary, and last week I talked about how these Bitcoin treasury companies certainly feel like something you'd see late cycle. So we can add that to the list of things do you see that at the beginning of a cycle? We didn't see that in 2022, right? We didn't see that in 23 or 24. So to me, it's certainly late cycle stuff that we're seeing here. Again, who's gonna actually push us a little bit higher in price? It could be MSTR, Strive, Metaplanet. There's a list of them now, right? Um, it's going to be more interesting when things get bearish. What do these companies do with their assets? Tesla as well still has a boatload of BTC. They sold a little bit, I think in 2022, maybe if memory serves correctly. But even MSTR, obviously the biggest of them, strategy, that had a negative NAV at the bottom of 2022. Currently, the NAV multiple there is around 2x. You've got people like Jim Chanos coming out here and saying, we are playing the arb trade where you short the company and long BTC to capture the spread. So we're going to see a lot of that when this stuff, like for example, strategy versus Metaplanet. Metaplanet's MNAV is at like 3 to 5. I think it's just harder to capture the arb there. It's also got a tax advantage situation in Japan with Metaplanet. It doesn't make sense to buy BTC, where it makes more sense to buy Metaplanet from a tax perspective. So back to the question. Yeah, it's definitely, it's bullish to a point, right? It's bullish until it isn't. And then we have all these companies spewing BTC because it just doesn't make sense anymore. So ideally, they don't have lettuce hands and these companies are holding. But if we don't see that, strategy will certainly hold. But some of these others, I don't know if they'll have the conviction to hold. So in both a bull and bear situation, that's what's going to push us higher, and that's what's going to push us lower when these companies start selling, if they do. And that's, by the way, something that's easy to track. There's a website, it's called bitcointreasuries.com, I think is the domain. This will all be tracked. It's all on chain. We'll be able to see who's selling and when, what these MNAV multiples are. And we as a fund will be in that environment trading around that stuff if the opportunity presents itself. But it's not like this information is going to be secret or unknowable. It's going to be pretty public. Marathon's another one. They have a boatload of BTC. They're barely above their NAV. They have a ton of debt. And that's the other question with these companies. If the debt comes due, if the bill comes due, how are they going to pay for this? Probably through selling BTC. If you do have any questions for us and you're watching on the recording here, you can contact us, info@Canary. You can contact our head of client services, Jack Burke, as well, with the email listed there. And with that, I think we will call it until next month. Thanks for coming.